Good morning, traders. It is Thursday, October 2nd, 2014. It's 8:04 a.m. Chicago time. Sorry about the delay. I thought I put the link out sooner, but I did not, getting caught up in the movement. Derivatives trading involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations subject to change without notice. Past performance is not indicative of future results. Quick rundown of the news cycle here. UK September construction PMI beats 64.2 versus 63.5. ECB's Draghi last night before the current conference that's going on, which you'll hear me pause and listen every once in a while. I apologize for that. ECB's Draghi released a statement last night saying the monetary policy alone cannot return the Eurozone to growth. Fiscal and structural policies also needed. Hong Kong's protests continue still peaceful. Now remember, Hong Kong is a special administrative district. That's the official designation for Hong Kong to China. If you didn't know or don't recall, Hong Kong was run by Great Britain until the 1st of July of 1997. It has a chief executive who is in charge of it, rather than a president or a mayor or governor. That chief executive came out and said he may let the protests go on for weeks if necessary and subside naturally. He will only intervene if violence or looting breaks out. There was a strong move down on the Asian session with Nikkei taking its sharpest drop since August 8th. We're seeing that percolate into through Europe and into our session now. The energy complex getting hit hard as WTI futures broke below $90 for the first time in 17 months. Saudi Arabia's Aramco cut their official selling prices for crude oil. Libya is also creating excess liquidity or excess supply as the situation there gets under control. For the time being, Libya is expected to get up to 1 million barrels per day in short order. A couple of things. ECB's Draghi still talking, so if you're trading any currency pairs that involve the euro or treasuries, you need to pay attention. You can watch the Q&A session now live on the ECB's website. And then also keep an eye. We're going to look today a little bit more macro. We're going to look at crude oil, gold, and treasuries because there are some important underlying shifts that are going on, that are taking place right now, which are translating into the movement that we've seen recently and the lack of liquidity in the market depth across many products. The DAX right now is single digit up and down on depth. I'm seeing only several prices that have a double digit bid or offer. It's interesting. Markets feel like they're capitulating. Looking ahead, today, 8:45 ISM New York, no expectation. At 9 o'clock Central, we have factory orders expecting negative 9.5. Also at 9 o'clock, we have U.S. durable goods revisions, U.S. durable goods X revisions, and U.S. durable goods X transports, a whole bunch of slew of numbers there. At 9:30, we have natural gas expecting 107 billion cubic feet. At 11 o'clock, we have Fed's Dudley. He's a voter. Dove speaks in New York. At noon, we have Fed's Lockhart, non-voter, speaks on employment insurance. 12:30, we have Bank of England's Broadbent. And then this evening at 6:45 Central, we have Fed's Bullard. That's what's on deck for today. Let's take a look at the chart. Before I forget, I want to let everyone know that we hold these webinar sessions every Friday at noon Central, 1 Eastern. They're called AAQs, or Ask a Question sessions, where I just open the mic to whomever wants to ask a question. We share a lot of information. This is generally for stage 5, but once a month I'd like to open it up to the public. So look out for a link to that today and tomorrow. It's a webinar session that lasts about an hour, and it's an open session for anybody that has a mic and wants to come on and discuss some trading related item. Here's what we've got for today. Let's start off real quick by taking a broad look at the markets rather than looking at the S&P like we always do. Here's a chart of the bonds. Let's switch to 120. This is an all sessions chart of the bonds, U.S. bonds, and you can see here we're pushing new highs. Last night it got up to 140 and one tick, and it fell off approximately a handle today. And overall, this is really strong. If you look at yesterday's movement and the day before, we have a or yesterday's movement, you have a pretty strong push up. Let me switch to the pit session. CBOT. You can see that movement there, very strong, closing at 139.20 right at the high, and it drifted up to 140 and 1. This is part of what we see here in the Bund. Here's the Bund. This is the 10-year note. Again, new all-time highs yesterday and has fallen off, and now it's reacting. You can see these long range bars reacting to the ECB's announcement. But this is a strong driver right now for the market. A lot of money is going into safety, and it's affecting how other things trade. With the Treasury pushing up, you have the euro down, but the other thing that you want to look at is crude oil. Crude oil, after making a nice run up, took a big hit yesterday. Very wide-ranging day, 94.85 down to 90.86. That's pretty huge for crude. It took back almost a week's worth of range in one day, and it's again the day before, and then yesterday again it has dropped. This is a pit session only, but if you look at the bigger picture with crude oil, you can see that where the trend is. So here we peaked out at 102.69, and we had a pullback that was approximately 62%, and then we have a lower low. So this is an impulsive move with a pullback. This is a completion move right here, and it looked like it was going to correct up. The target I had was 95 something from a couple of days ago, right here, 95.31, and it's failed to take it and has dropped. And right now, crude is in this thin volume area. If you look down here, you'll see that there's very little volume below for crude. I moved the chart to the last swing low, so I'm looking at everything that happened from the 9th of January going forward, and I see that there's very little volume holding this back, and there's an LVN zone down here in the 86, 89 and down, 87 down to about 86.60, and I think that's the likely target down. Remember, crude oil is denominated in U.S. dollars, is priced in U.S. dollars, just like gold is. So let's take a quick look at gold. And there is a bar chart. So if we look at gold here, we've got the same kind of thing, right? The U.S. dollar is going up, so the value of gold is dropping as the dollar gains strength, and it's moved below the last low here of 1242, and is pushing down into the 1193.50 next. It looks like key areas below right here, 1186.60, before we get into this hump, and then again down at 1110. So this is interesting in that the dollar strength is pushing gold down, and the market's not seeing this as an item to invest in right now. So these are big shifts that are going on that you need to be aware of. The gold monthly profile is clearly shifting lower as we look at the way gold has traded on a monthly basis. It had a nice balance zone here, which came back and tested, and is moving away from it. We had an impulsive month last month where gold just basically opened at the top. You see this dot, this dark dot versus the other red ones. That dark dot is the open, and it closed right near the lows of the month. And here we are forming. We're on the second day of the of this month. We're forming a lower low on this point of control. So gold seems to be trending down, and it's got some oomph behind it. Let's look at yesterday. I know there's a lot to talk about today. Yesterday, we opened on the edge of the range, and yesterday's hypothesis is a potential test up to 64.50, 65 and a quarter. If there's enough if there are enough buyers, then we expected the overnight high to be tested and for it to roll over. The overnight high yesterday was 67. And what it did is it actually followed the hypothesis pretty nicely. The problem with yesterday's trade is that it just did not push into the value area high enough. It tested value low the prior day, and it just dropped rock, and it was very difficult to get on. But overall, the market executed the plan that was outlined in the Trader Bite pre-market almost completely as expected, which is always nice to see. So here it is. It pushed to 62.75. Remember 62.50, the 62.50 area I discussed in prior Trader Bites. Here's the LVN at 62.75, 62.50. It was an HVN before that, and there's some stuff back here that sets up the 62.50 area. Pushed to 62.75. It found sellers for a strong rotation down 5.25 points. The recovery was not even 50%, just 2 points before it found the next leg, another 6.75 points. So this move continues to be impulsive since the second rotation is bigger than the first rotation. So we consider this one big rotation. Pull back 2.5 points again, and then another move down to 49 from 54. So another 5.5 points, and then that looked like it ended the impulsive move. So we expected another leg down. And remember, I talked about 48.25, 48.50 as the key target below, with 47 behind it. And then the extended target being 44.75. The market had a decent rotation from 49 to 54, 5 points. That was the biggest rotation up. I pointed that out on Twitter. And then it just sat sideways. It was not able to find buyers, did not test the mid at all during the morning. So it was pretty much, sell pullbacks to higher prices, and that's what it continued to do until it retested the low, could not get down into the 46.50, rotated up, got on the other side of the point of control, and then went through the IB. That's when I started to think that the selling may be done, and we may have a quick V bottom type on a longer term chart. Not so. It came back below the mid, which is this blue line, and continued to chop with a downward skew right through the low. We expected the IB to be broken, but with that strong move up, it looked like it might actually climb up because there was not much there in terms of volume on the upside above 56. So I wrote on Twitter, we'll look out for 56 being broken. It went to 57 and a quarter and fell below. And this was just very, very choppy here, all the way down to the low it had put in, which is 33.75. Okay, so that's what it did yesterday. It was a sustained selling, and if you look at this profile, double distribution, but not the normal way. Generally, a double distribution has a distribution up top while the market waits for repricing, and then it breaks through hard, and then it creates a second distribution somewhere near the low. This ended up creating a double distribution somewhere in the middle. The market found consensus here for a while before it actually shifted the point of control right at the close down to the low, to the lower distribution. So today, it's really important to watch the LVN zone here, 44.75 all the way through to about 46.47. The overnight high, 45.75. The market was making a bit of a recovery, and now it has sold off to yesterday's low, 33.75. So we have a weak low on yesterday with the overnight session. So let's look at all sessions combined. Here's what we have: a nice chop through the Asian session, as we always see. We've been seeing for a while, and then it starts to break down on the European session. A nice recovery ahead of the ECB, and then just whipped around, and then now it's been selling off. If you look at the euro's moving in the other direction. The euro's been pushing higher with Draghi's comments on pretty good delta so far. What does that all mean? What is the plan here? So initially, when it was up here, initially the expectation was for it to pull back, and that was my primary hypothesis based on last night's homework, that it would pull back and probably push down into this 37.75 area or so, and then I expected it to find buyers back up with a target of 51.75 from 36.37, which gave us 14 points, which would be the day's range most likely. But now it looks like it's likely to seek lower. Next target down is 31.50.32. So for now, it looks like it is shaping up to push through down into this area here, 31.25.32. And remember, we have a trend. We've pushed through this LVN zone here yesterday to the other side, which was the that 44.75, which took out. We're back into this through these trend days and back into this next balance area. So the question is, what will it do once it pushes into this? It'll probably push through by a little bit. What will it do in the 32.31 area? Will it find support here? Probably around 30. There's a decent CLVN here at 30, a nice divot that we carry over from way back here. Will it find support in this area? If not, if it does not find support and turn and out of this balance zone, guess what the next target's likely to be? The next target's likely to be 15. 15. So the next step will be to test the point of control below. So the primary idea for the day, or the primary trade for the day, is for the market to likely chop around but then continue lower. The overnight low looks very, very weak to me now that it's been retested to the tick. We have a double bottom. I expect that the sellers will maintain control. The point of control is well above us. The market's likely to open, find responsive buyers back up maybe into 40.75, depending on whether or not we find some serious buyers. 40.75, as long as we hold the 43 area or so, just above here, we're likely to chop around, turn back, and take out the low, and that's the trade I'm going to be looking for. I'm going to be aiming for this 30 from the 40 area for 10 points. Okay, and then the next targets down, as I discussed, if it does not hold, if it gets down into 30, 32, and does not get out of this balance zone from the beginning of August, then it's likely to get down into the control of that zone, which again is 15. So that's may not be today. Remember, tomorrow, you know, we're doing the ACB now, or actually I think he's finished. But tomorrow we have non-farm payroll, so we have another driver for the Fed, for the Fed's policy coming in tomorrow. But I expect this overnight low to be taken out with a high probability. That does not constitute a trade in and of itself, but it gives us a pretty high probability that this is likely to break before 45.75 is likely to break, and there's a very high probability that the overnight low or the overnight high is going to break during the session. So be cautious. There's additional volatility. If you have noticed, the book is still thin. I hope it continues to be this thin. I know it makes some people uncomfortable to see that the book is so thin, the dome's so thin, but this is how it was when I started trading. It was a lot thinner, and the movement was a lot more fluid and much easier to read. As far as I'm concerned, I find that getting filled is a lot easier now, and this may be attributed to the volatility overall. The VIX is not really at stellar levels. We've been here before. I feel like 575 has really helped to clean things up, and I appreciate the CME kicking that in, although I have no idea how they'll enforce it. But it seems like the book is actually trading a little bit better, more fluidly. Anyway, I'll leave you with those thoughts. As always, please, please, please put risk first. Yesterday was a rough day for several of our traders that just refused to accept what the market is doing, and ended up giving just a tremendous amount of their account. I hate to see that. It's just not, there isn't one trade that is worth more than a couple of percent at the most of your account equity value. There just isn't. If your account balance is very low, these are very leveraged products, and if you're trading at $500 or $400 margins, I think you're crazy to trade at such tremendous leverage. But if you do, you still need to pay attention to the fact that you cannot commit more than a few percent to every trade so that you can stay in this game. I cover this a lot in webinar 3 of my series on futurestrader71.com. Again, tomorrow we'll have an AAQ, which will be at noon. You can get on and ask whatever question you want. I'll try to answer it as clearly as I can. Stage 5 traders, your pop quiz is due at noon today. I'll catch you tomorrow. Take care.